This is Tyler from MacroOps bringing you this week's Market SitRep entitled Blockchain. Now this week we're talking about Bitcoin and blockchain because there's just not much new stuff out in macro land. The news is boring, nothing's happening, stuff's in price ranges, there's nothing to talk about. So we're going to pivot and look into this alternate technology. And we also took a little position in the Bitcoin market recently as well. Then we're going to follow up with just a few tiny little central bank updates. They don't mean much. And then monthly charts. So Bitcoin, what is Bitcoin? Well, it's a digital alternative currency, and it's not backed up by any central authority. It's merely ones and zeros in a machine. So why this exploded onto the mainstream was mainly because of anonymous transactions. And as you could guess, a lot of people conducting drug deals online and everything on the black market could benefit from anonymous Bitcoin use. Also, it's a finite supply of Bitcoin, so no central bank or government can, quote unquote, print more and debase the value of a Bitcoin. So you got drug dealers, and then you got a bunch of conspiracy theorists who are extremely scared of fiat money going to hell. And so just like a lot of Bitcoin enthusiasts hold and protect against the potential destruction of fiat money, and they're inflation hedged because there's a finite supply of them, just like gold. You can only dig so much gold out of the earth. You can only produce so many Bitcoins. 21 million is the exact number. That's what the programmer encoded into the entire system. So the good news is, if you want to play around this market, there's an ETF now trading on the OTC market that gives investors exposure to the price of Bitcoin relative to the dollar, and that ticker is GBTC. Otherwise, you need to open an account with the special Bitcoin exchange to trade the spot market. There's also some futures exchanges popping up, one in particular called BitMEX, where we're interested in checking out. Looks pretty cool, and we'll update you guys on that once we dig into that a little bit more. But for now, here's GBTC. And you can see there's just a huge breakout. We entered a small position right there, and who knows how far this can go. The Bitcoin market's a very, very speculative and emotional market. If you're unfamiliar with the price series, here's Bitcoin spot on a log scale all the way back to 2013. You can see it just has a stratospheric rise from $750, $10 all the way up to $1,000. Been going sideways for a few years now, since beginning of 2014, but now it looks like it's about to break out to the upside. So it could be a little fun for the traders out there that want to speculate in the alt currency market. But in reality, if you look into what the VCs and the iBanks are going nutty over this for, is not the Bitcoin itself. They don't believe it's going to take over fiat money, but it's the underlying technology used to record Bitcoin transactions. And what is that technology? Blockchain. So what is blockchain? Think of blockchain as a large digital record or an immutable database of facts. Anyone with the internet can look and see what it is and what's been recorded into it. No single person is in charge of the record, and it's serviced and maintained by a network of computers. Anyone can add their computer to the network. Right now, people add their computers to the network in exchange for Bitcoin. So if you service a network and do work for the network, you get rewarded with some Bitcoins. It's a distributed ledger, so there's no single vulnerability point. And in order for info to be changed on the network, it needs unanimous approval from every single computer working on the network. And because there's no single vulnerability point, it makes it to be a very secure system. The information on the chain is stored on every computer in the network. So if you kill one off, the information is on every other one. And so why was this revolutionary? Well, pre-blockchain online, you needed a middleman to complete a payment. There was no way to send payments online without a middleman processing this payment. And the middleman's job was to verify that the transaction was real, because with online payments, when you send a piece of code, that code could potentially be copied and sent again to a bunch of other merchants, and that's what coders call digital double spending. And that was a big problem, so you needed these payment processors to verify that there was no digital double spending. But now, blockchain technology has solved that problem, because instead of a bank or a middleman, the network of computers on the blockchain processes the transaction, and if they approve it, the payment information, time, the amount, etc., the wallet address where the Bitcoins are heading is added to the database. So after that transaction is approved, a block of data is added to the chain of information, hence the term blockchain. So this is why Bitcoin has truly been revolutionary, because it solved that double spending problem where we have a distributed ledger that records all the transactions at a very, very small cost. here's more advantages of blockchain tech. Security, number one, all the info is kept permanent and copied in every machine. You would have to hack every computer in the network to disrupt it. We already talked about that. You got code controlling units of account and how stuff goes in and out of accounts instead of humans, which is potential for a huge efficiency gain. So you don't need a large capital backing and a big reputation like all these banks and payment processors needed before they were allowed to verify all these transactions and payments. So you have 99% of what is needed to be considered a trusted entity, but without the high costs. So blockchain is revolutionary in that respect. So now the iBanks and a lot of the VCs are looking to say, hey, how can we replicate this technology outside of the Bitcoin environment into our own current systems to make things run smoother and more cost efficient? So they're thinking about recording security ownership, recording derivative ownership, even recording fiat cash where it's at and who owns it on a blockchain type technology. So the tech can still be harnessed within a regulatory environment. That's what these guys thinking, at least. It doesn't need to be in this Wild West Bitcoin market where the technology is used. It could be in more conventional markets. And also, there's a lot of alternative uses popping up and coming up from this technology, including real estate, car registration, birth, death, and marriages. All this stuff can be recorded in this immutable database of facts, this blockchain technology. It can interface with the Internet of Things. So, for example, if you wanted to go home to open up your house, you'd have a mobile device contact a blockchain, and then if it checks out, your house unlocks itself and you're let inside the door. We got digital identity authentication applications, which people can use to basically log into all these damn accounts online. Right now, we have that really clunky username password. I don't know about you guys, but I have like 50 passwords I have to remember for every damn site I have a login to. These could take it down and put it into just one identity that allows you into all these sites, and also decentralized messaging. So for example, instead of storing and sending messages over Facebook servers or Google servers, we can have it go over a type of blockchain decentralized network. And that solves a lot of privacy issues that we're facing. Also, we got brand authenticity, so it's way harder to pirate valuable brands if you can register things like Louis V purses to blockchain technology. You got smart contracts, which encode not just the ownership, but the conditions of the ownership. And finally, voting applications. So if they can use this technology to make it possible for people to vote on their mobile device and all have it safe and secure, this could be huge, and it could increase voter turnout. We'd have to get rid of the antiquated system that we have right now. So you can see there's just a lot of upside with this blockchain technology. So now we're going to pivot real quick to central bank updates, because there's a few announcements. We had the Fed and the BOJ release some statements this week, and it's worth talking about. So for the Fed, basically it was a non-event for the markets. They're neither hawk, they're neither dove. They're setting up for the stage for a June hike. They say they're data dependent like they always do. It's very boring. Nothing happened. Markets didn't do anything. And I double-checked the latest GDP number that just came out for Q1. It's at a measly 0.5%. So it still looks like recession's on the table, although Fed's never going to admit that. They're just going to sit there and say, oh, we're data dependent. Oh, we're data dependent. They've done nothing. Very boring. We're waiting until the June meeting. Now, the BOJ was a little bit different story. They surprised the market big time. Everyone thought they're going to ease more. Croda said, you know what? Screw it. We're doing nothing. We're going to troll the markets again. USD-JPY tanked hard. Nikkei tanked hard as well. See here on the graph. USD-JPY, that announcement came out. It strengthened heavily. The market was looking for a lot of easing, a Kuroda neutrino bomb to get this thing going again, but he's just not giving it to us. So he's just trolling the markets yet again. Same thing with the Nikkei. Nikkei fell hard after this negative surprise. And so the Japanese markets are just looking a little shaky right now. A little shaky. We're not getting too much support from the central banks over there. So who knows what's going to happen. We have to stay tuned and watch. But it's making very treacherous environments to pick a side on here. And now finally, we're going to transition to a presentation of monthly charts. And the reason why I want to go over monthly charts is because a lot of times we get distracted with the daily and weekly fluctuations of the market. You get caught up in the emotions of the moves. You start to lose perspective on the long-term fundamentals. So it's a good exercise once in a while to back out and really look at everything from a bird's eye view, a 40,000-foot view, and make peace with yourself and make peace with your process and what you believe in. It could be very therapeutic, and you get a lot of clarity doing it. So let's go through a few of them. So we're going to kick it off here with EEM, and here's the monthly chart of EEM. And all we can see that's happened is we've officially broke out of this big channel right here. And that happened back in July of 2015. And so we're currently in the process of this downtrend right here. Now, we've had a lot of chop in this area, but if you really want to back out and look, this thing is potentially starting the first part of a major downtrend. Now, this could be a huge fake out and we blast up to new highs, but that's extremely unlikely given the backdrop and the fundamentals we're seeing. So from a fundamental perspective, the bearish thesis on this is still there. And from a technical perspective on the monthly chart, it's still very much valid. It's vastly different than this large run-up we had pre-2008. The action has been muted. Not many people have made money in emerging markets, and it's continuing to look like that going forward. It still wouldn't surprise us if we challenge these 2008 lows. Now, next one we're going to take a look at is SPX. And SPX is really interesting. It's been chopping around a lot lately. I'm going to turn off the log scale right here real quick. And it's getting people really confused because this has just been a big mess and problem for everyone. No one really knows where things are going. It appears to be a top, but we still have these rip your face off rallies. So the key with SPX though is to look at monthly bar closes below this black line here. And why do we care about monthly closes? Well, they confirm the move. So you could see at the top of 99 when we had a monthly close low, it confirmed the down move. And again, a monthly close low, and it confirmed the down move. Same thing with 2008, right? We sell off, we come out about 50%, and then we have a monthly close confirm the down move. So you could see here that we haven't had a monthly close confirm the down move. We've had these wicks. And these wicks just mean overly bearish, overly aggressive shorts are getting shaken out, and that's why we have these rallies that rip to the upside. So we need to see closes down low on the monthly time frame to really be excited that this trend has kicked off on a monthly basis. Next, let's turn to gold. Gold's been holding up so far on the monthly chart. It really does look quite bullish still. And let's go do a log scale here real quick and back out. It looks like it's going to continue to rally from a monthly perspective. This thing hasn't pulled back like we previously thought it would. It's holding this rally right here. So we have to respect this gold strength, and we have to be prepared for it to go up and challenge the highs again, especially if the dollar continues to weaken. And right now, the dollar is sitting at the bottom of its range, as you'll see soon. So gold will continue to show strength here as long as the dollar is weak. And finally, CL. A lot of volatility in CL lately. Here's the log chart. Let's go back to non-log. And the dominant interpretation right here is the breakout of this falling wedge. And typically falling wedges never kick off a new bull market. But from a technical perspective, it appears that the CL market, or the oil market, is due for some basing. Because of this strength, it's very unlikely now that this thing's going to roll over hard down to 10 or 15. We're most likely just going to see a bunch of basing here as well. But overall, the market still appears relatively neutral. So the picture is muddled here, and we just kind of have to sit at the sidelines. Now, the long-term downtrend seems to have stalled at these prior lows, and that's probably what we're seeing here, while we're seeing a rebound. So it's going to take a lot more time for this market to develop and get people in position for the long haul. But we just wait for clarity like we always want to do. And finally, we got Dixie, which is the dollar index. And you can see here, we've had that huge run up, and then we're just sitting in this enormous range, frustrating the hell out of everyone. Now, this doesn't mean the dollar bull market's over. This looks more like a continuation pattern than anything. Now, we could slip this line down here, which it looks like we might do that, and maybe come back and hit a halfway back mark before we rocket to new highs again. But you can't really say the bull market and the dollar is over yet. You know, we need to see it fail and hold these lows down here and then come back into the range. But we'll have to keep a close eye on it. Still, from technical perspective, the bull case is very much there. It's just taking a little detour for now. All right, guys, that's it for this week's Market SitRep. Thanks for watching. If you like the presentation, give us a like, subscribe to the YouTube channel, or follow us on social media at StockTwits, Facebook, or Twitter. All the links are in the description below. Visit our website if you want to read more about what we're talking about. Thanks for tuning in, and I'll see you next time.